What is up, Green Teamers? We're in part 2 of 6 of writing an offer. Today is all about estimating costs to buyer. The stuff we're going to go through is knowing different types of financing, explaining upfront costs, breaking down mortgage payments, detailing fees, escrows, and prepaids, and then sharing the estimate. While I'm going through this, I'm also going to have the CTO agent app over on the side so that I can kind of go through some of the information as we're going through this. So we're going to just start with a $300,000 home, and then we're going to work through the different types of financing. So loan type, here's the second one. You've got all these different options for financing, including all cash, conventional, FHA, VA, USDA, and owner finance. There's also conventional second, so if it's a second mortgage, or then an interest only. We very, very rarely use any of those options, but they are in here. We're going to use conventional for the time being, but know that things will change based off those different types of financing and the different down payments that are necessary. So conventional could be anywhere from 3.5% to whatever. So 10% is what I've gotten here is kind of a common one we see on conventional loans. FHA, you're going to see a 3.5% most commonly. VA would be a 0% down in this scenario, as well as USDA would also be a 0% down in this scenario. So then explaining upfront costs. So earnest money is not an expense, but it is here in the app. We can type in our earnest money on a $300,000 house. We're always going to recommend a buyer put 1%, 1 to 2% down. So that's a $3,000 earnest money. Again, it's not an expense. It'll actually go towards that down payment at closing. Home inspection and termite inspection are not in this estimate. So you need to make sure you explain to people that's something they're going to pay during the inspection period, but it's not part of your actual closing estimate. And then the appraisal works the same way. You're going to order the appraisal. The buyer's going to order the appraisal from the lender through the lender during the loan process, during the inspection period to get their appraisal. So all three of those, home inspection, termite inspection, and appraisal, aren't actually in this estimate. And earnest money's in this estimate, but it's not actually a cost. It's just going towards that down payment. Next up, we've got those mortgage payments and breaking it down for principal, interest, taxes, and insurance. You can see in here, it's got a standard hazard insurance and taxes that just auto calculate in here. You can also put in an HOA amount. So let's say it's $200 a year, just for example. And it's also got a buyer broker fee. That's the amount the seller is paying towards the buyer's fee to the buyer broker at closing. So it's a credit from the seller to the buyer. And we're just going to hit compute for now so we can look at this mortgage payment. So you can see in the mortgage payment, you've got principal and interest, which is combined together at 1751.21. That's the amount it's going to take over 30 years to pay the mortgage all the way down to $0. So that's calculated for you to figure out that principal and interest. That number will never change throughout the 30 years. What will change is that taxes and insurance. That taxes and insurance is recalculated each year. The insurance with an insurance policy each year is paid in credit, which means it's paid ahead of time. When you first purchase the insurance, then it covers the next 12 months. Taxes are paid in arrears. So after the 12 months are complete, you pay it at the end of the year. That's how taxes work. Those are calculated in there for you. We've also got PMI, which is private mortgage insurance. So any government loan that starts at a higher than 80 to 20 loan to value would have PMI on it. And that's what's in there. And then the HOA is just showing your monthly HOA, which usually gets paid annually, so it doesn't matter how it's calculated in this mortgage payment. So those are your mortgage payment. That's how it's built in this estimate. That's what you'll be able to send your buyers when you calculate this. Now let's talk about these closing fees. We can hit detailed closing cost. We can go into these fees a little deeper. Fees are paid at closing for service from the lender or title company. So those are the fees you see in here, and you can see them under title fees and lender fees. Again, these are just estimates, but they're estimates from CTO, which is pretty accurate for their fees. Escrows is a different thing. Escrows is paid at closing to cover future insurance and tax payments. It's in there to reduce lender risk. So if this borrower doesn't make their payments, it's in an escrow so that the mortgage company can pay for back taxes and insurance as needed if they have to take over the ownership of the property. Prepaids is paid at closing for things in credit like homeowners insurance. So that prepaid amount is getting paid at closing to cover that first year of insurance and things like that. So those are your three types of fees you're going to see in here. You can see 14 months of insurance, 2 months of that's going into escrow, 12 months is your first 12 months of your homeowner's insurance policy, 4 months of taxes just going into escrow to protect you, and then 15 days of interest. That's based off of what day in the month you purchased the property. That kind of covers all of those fees that are in there. And then we can go into sharing this estimate. Once you've got the estimate done, we can go back out of these detailed closing costs and we can actually click the share button and send it to this little up arrow in the corner. We can send it to our buyer. You can send it via text, email, however you'd like to send it. You can also just send it to yourself and forward it to your buyer. So that's how you do it. You can just send full report. It looks like this once it pops up. And then you can click the up arrow again and send it to yourself. This is all about building your estimates. You're required to do this for every property. When you send this with your offer, you need to get it signed here by your buyers and dated at the bottom with all of these costs listed so that you've done your part in the process. Hopefully that helped you guys, and we'll see you in part 3.